In this video, we're going to look at equity funds. Equity funds are those that invest in stocks of companies, and these funds give you the highest return amongst all asset classes over a period of time. We looked at a chart in the previous video which looked at the returns of the various asset classes, and you saw in that video that the equity fund returns were the highest, though the volatility was also high. But these funds are the best way to make your money grow. Only equity funds consistently beat inflation. However, equity funds need to be held for a period of at least 5 years to protect against market falls. We're going to look at a chart on the next slide in more detail, but before we do, we're going to cover the concept of rolling returns. Rolling returns are returns taken for various periods of time. So, for example, a 5 year rolling return would be 5 year returns, say in Jan 2004, and then the 5 year returns in February 2004, March 2004 onwards until the end of the time period that you're looking at. Um, these returns are very helpful in understanding how funds perform over a 5 year period, and you can actually see what the consistency in returns are for that particular period when you look at rolling returns. So coming to the chart on the next slide, we first see that there are two lines on the chart. The light blue line is the 5 year rolling returns, and the dark blue line is the 10 year rolling returns. So let's focus on the 5 year returns first. The 5 year rolling returns show you that you know they are generally positive, and they even go up to a return of 40% annualized um, at some points. Uh, they come close to zero twice, which is in '05, or between '04 and '05, and then again in Jan 13, and they go below zero once only when COVID hit, which was in about March 20, March and April 20. But otherwise, you see generally the 5 year returns are positive throughout. And this shows you that holding equity funds for a period of 5 years will normally give you positive returns, and actually pretty good returns if you take an average of the numbers that are in this chart. And if you then look at the 10 year rolling returns, you can see, though the spikes aren't that high, um, a 10 year rolling return has never given you a negative return. Even during the COVID phase, your return was still more than 5%. Um, Now, 5% may not be a great number, but that's only at one particular point in time. You want to make sure that your returns are beating inflation, which is about 7% regularly. You want to make sure that you maintain your purchasing power by beating inflation, and no other fund will help you do that as well as an equity fund. I hope you enjoyed this video. Thanks for taking the time to watch it. Do reach out to me at the email address and the mobile number provided. You can also look at my website, which is www.aditshah.in. Links to my social media handles are available there. Please follow me. Um, Thanks for taking the time to watch this video. Take care.